Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. In this episode, we speak with Brad Stroh, co-founder and co-CEO of Achieve, a digital personal finance company focused on helping consumers manage, reduce, and resolve debt. Achieve operates a multi-product platform that includes debt resolution, personal loans, home equity lending, and financial education tools designed to support consumers across different stages of financial health. The company serves individuals navigating high-interest credit card debt, affordability challenges, and long-term financial stability. Brad co-founded the business in 2002 as Freedom Financial Network and has led its evolution into Achieve, overseeing the expansion from a single solution into a broader personal finance platform. He brings decades of experience building consumer financial services businesses and working across lending, debt resolution, and capital markets. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. Brad, thank you so much for taking the time. It's a pleasure to be with you.
Great to be with you.
I thought where we could start is the history of Achieve, because although Achieve is maybe the newer name and brand, your company, you founded it quite a ways ago. It was in 2002, I believe, with the Freedom Financial Network. So maybe if you wouldn't mind taking us through the origin story and then all the way up to the different brands kind of under the Achieve umbrella to present day.
Yeah, great. It would be good to connect all the way through and sort of share the genesis of the business, which kind of that DNA, that passion, and that dream still, perpetuates all the way to today as Achieve. But you're right. Andrew and I co-founded the business in '02. We graduated from Stanford Business School, and our core premise, which still is as relevant today as ever, is the average U.S. consumer is underserved by banks and the financial services landscape, in particular for the liability struggling consumer, struggling with debts. And we called it Freedom Financial Network because we knew it wasn't going to be a single point product. We had the hypothesis that consumer was over-levered, underserved, undereducated, didn't have trust in the financial ecosystem. And so building a platform that was liability optimization, holistically around solutioning and pathing consumers to a brighter future across several products. Fast forward to today's Achieve, that's home loans and HELOCs. That's personal loans, a specialty loan product, and then a non-credit based debt settlement product. That fits together to be a multi-product platform, helping these indebted consumers solve their debt problems. In '02, we were connected to Michael Burry, who was the big short and shorted mortgage-backed securities. And his hypothesis got a lot of leverage. Our hypothesis was very similar and got a lot of leverage in an operating co. And the average U.S. consumer that was indebted didn't understand their options, was largely kicked out of the financial services ecosystem. To us, at the time, I think there were 12 trillion of consumer debt. Fast forward to today, we're approaching 20 trillion of consumer debt. The need's as high as ever, and we still have a lot of conviction in this multi-product holistic solution. And yeah, we've rebranded all of the products now as Achieve so that it fits together and more coherent to the consumers we serve and, our brand message. But boy, we're still, chopping away at that core hypothesis that building the liability optimization leader in this massive TAM. And along the way, we rebranded from Freedom Financial Network to Achieve.
And what would be the most prevalent kind of solution? Like if you were to take the pie of activity under the Achieve umbrella, which one is the most active?
Well, the whole liability optimization platform is focused on debt consolidation. So that's across all of these products. So it's relatively balanced across our portfolio in different markets, by the way. So we've got pro-cyclical and counter-cyclical products. We are in the front lines of seeing the state of consumer finance. So you sort of see ups and downs. But the debt settlement product today is in a lot of demand. We see a lot more struggling and striving consumers that are under the weight of a lot of debt because of distress in the consumer. The HELOC product, there's 37 trillion of trapped equity in U.S. homes. A lot of demand for that product, a lot of growth. The personal loan product, just because the U.S., within a K-shaped economy, you see kind of the middle income, lower income consumer struggling, and then we have to pull back on credit risk. That side of the business still growing, but growing a little less fast than the other product categories today.
And is the issue that a lot of these credit cards are super easy to sign up for and they have really high APRs. So you get into this situation where the average consumer is not really paying as much attention to the debt they're ringing up and the tremendous interest charges that they're facing. So then they seek a solution and they find Achieve.
Well, I go even upstream from that, but that's exactly right. But if I go upstream from that, there's a lack of education around financial services and credit scores and yield spread premium and cost of debt and cost of financing. You graduate high school, you graduate college, you get a free Capital One card and a Frisbee and a t-shirt, and you're really not equipped to manage what can be a pretty toxic financial instrument. And then you layer on the fact, you look at the last couple cycles, inflation for the bottom half of the US economy outpaces real wages. Now you got an affordability gap. That affordability gap, and that's homeowners, that's rent, that's groceries and, eggs that get into popular media, but that's childcare services, healthcare, all of that creates an affordability wedge. Consumers who are ill-equipped to manage, and it's very ease of access to credit cards and buy now, pay later, and all these instruments where you can pull financing forward and delay the payout, and you get that product, you end up in this situation where now consumers that are poorly equipped to manage get easy access to very expensive credit products, and then they get over their skis if they have a financial hardship, healthcare, loss of income, divorce, or just dealing with an insurmountable amount of debt. They really don't know what to do. They don't understand all of their alternatives. All of that kind of is on the front end of, what drives demand for our business. If you look today at this almost 20 trillion in consumer debt, interest rates charged on that credit card debt at all-time highs since recording, well, that means monthly payments are really high. That means interest costs really high. And consumers, to a large degree, depending where you are on the financial health and FICO spectrum, you've got great alternatives if you're on the top end of the K-shaped economy, and you really have very diminishing alternatives if you're on the bottom leg of that K-shaped economy. We serve both, and we try to bring transparency, education, trust, understanding future outcomes, and then finding right product, right fit for the right consumer with personalization. That's what brings consumers to us, and that's kind of where we meet them and how we help bring solutions to that indebted consumer.
And so you're effectively able to work with each of these problematic situations and say, for example, okay, stop spending, only spend on the necessities, and we'll help you get this paid off in 24 months or whatever the time frame is.
That's exactly right. And by the way, this is not across the spectrum of the segments we serve. They're not all struggling. Some of them have options and are optimizing where you're paying 22% on 3 credit cards and 3 buy now, pay later accounts, but your home is at a 60% loan to value, and you could get a HELOC from us at 6.25% at a monthly payment that could save you $800 a month. We'll build effective sort of Pareto optimization curves for each consumer and say, based on product, based on fit, based on qualification and suitability, here's the lowest cost of capital. Here's the goal oriented based on your constraints and your goals, best product solution, and then try to tune for the consumer that is really struggling. So they're behind on payments. They have 10 credit card accounts. They've tried to refinance and they don't have those options. That's where we will do real budget work. And we've got apps that help them for free, that help them understand their cash flow situation and how to optimize their cash flow. And then what percent of that cash flow can be allocated towards debt repayment? And then given that constraint, is it a debt settlement program? Is it a personal loan consolidation? Is a home loan the right solution to not put risk on them, but help them understand what is the right path forward across cash flow optimization and then liability and kind of cost of debt optimization? And then we also try to build pathing solutions and visibility in the future. A little bit of choose your own adventure where if you choose these paths, here's what you look like in 3 to 5 years across cash flow, credit, liability, wealth, and then try to path them through the solutions in our Achieve ecosystem.
And there's other solutions available aside from Achieve out there. Is it the simplicity or the ease of use of your platform that draws in more of the users or the borrowers, so to speak?
Yeah, a bunch of ways that we differentiate. So one is we have thousands of employees that are very empathetic and personalized approach. So we pick up the phone in a world where fintech has gone purely digital, and some competitors that we love and work with and respect, they just don't answer the phone. You can't have a conversation about complex financial decisions. So that's one. And we've got great digital tools and automation and AI, if that's the preferred path. So first of all, there's just empathy and personalization at how you want to interact. The second is where I started, being where we started as Freedom Financial Network and now Achieve. Multi-product, we have the firm belief that financial services is not one size fits all. It has to be solution oriented. Then it has to be multi-product where you can understand what product, what fit, and then path them to over the course of their journey with you and reward responsible behavior to get them under the right product. So being multi-product for us. And then where this conversation started, we've been doing this for 23 years. So just trillions of data points and be able to build machine learning and personalization algorithms to get right fit, right understanding of each consumer really does differentiate us in a ecosystem where sure, there's lending companies. Yes, there's credit counseling companies. Yes, there's HELOC companies. For us being multi-product with personalization and empathetic, whether that's digital or answering the phone and having a really difficult conversation around the complexity of your situation, whether we're the right fit or not, all that stitches together to make Achieve really different in that ecosystem.
And do you keep folks on the platform over time, even though you solve one problem? I'm sure there's other like sequential products that you could then help them with.
That's exactly right. We call that pathing. And then that is definitely the goal. And for a lot of the customers that come to us where trust becomes so important in financial services, and a lot of the member clients we serve will say, you were the only ones to pick up the phone. You made this seem easy and transparent. I understood my options and thanks. I will take any product as I journey up the FICO, up the financial health spectrum. So very commonly, that someone would enroll who tried to get a consolidation loan. They just don't qualify, or it wouldn't be the responsible thing to burden them with more debt. You put them in a non-credit based product. You're able to negotiate them out of their debts, rehabilitate their FICO score, give them a loan that could advance and accelerate their debt payoff. And then over the course of their program on that loan is do a rapid refinance into a much lower cost of APR and monthly payment, financial solution, and continue to path them forward. And then obviously in the future, we'd love to add wealth building and savings products to continue to pass them up, not just FICO and liability optimization and solve their debt problems, but then put them in just a brighter financial future and financial health across cash flow, wealth, credit, all of the things that really, when they come, they're not looking for a loan or a transaction. They're really looking for a solution and to help them understand how to get to the other side of whatever the debt optimization situation they're solving today. That's exactly the Achieve story.
Mm-hmm. You seem to be into leadership. I was following your posts and they're fantastic.
Appreciate
and you
it.
have like a philosophy, I feel like, on how you operate your business. You seem to be mission driven to truly help folks get out of, their financial predicaments in some cases. But tell us a little bit more about your overall mission and why you do what you do.
Yeah, it started with our original mission of Andrew, my co-founder, and I. We are a mission-driven business, and that mission is to elevate the consumers we serve. That mission is to build the careers and the lives of the employees and teammates we work with. That mission is to use a for-profit business to create wellness in the world, and that's the communities we operate in, just the impact we make on the world. So I'm a passionate leader, very philosophical about leadership and principles and how we elevate the leaders in our own company and build a culture of thousands of entrepreneurs that are empathetic inside of our company. So all of that definitely is the culture of the business we serve. It attaches really nicely, RJ, with the type of business that we're in, is when you are transforming consumers' lives, it lets you really attract great talent. And we talk a lot internally about balancing the heart, which is doing wellness and goodness independent of a profit motive, with the dollar sign, which is effective operational execution and margins, and really focusing on building a long-term viable, sustainable business. That all does fit together to be, it's more fun to be a leader of a mission-driven business with people you care about on a mission that you are very passionate about, where you're transforming the lives of the customers that you serve. Deep in my DNA and core to us. Tell you a super quick story. I do birthday calls and reach out to the thousands of people in my company on their birthday to this day, just to celebrate them and celebrate them on their birthday. Had a really fun call with a relatively new loan consultant. And she said she came from another company. She'd worked at a fintech for a decade, loves our mission, loves the impact, and that she'd only been here for 2 months. And one of the calls she had this week, where she was able to consolidate the debt for a husband and wife, they put her on mute, but she could hear their conversation, and that they teared up in the background saying, we've been struggling with this debt for a decade, and at last Achieve is helping them solve it, get them a path to a brighter future. They now understand it. consolidate into one loan with a payment that now they can afford. And her conveying that to me as a CEO of she loves our company, loves the impact. She feels like she's growing and challenged is like all this goes back to when we founded the company. This is why we're doing it on top of trying to create a really big, valuable business that has big impact in the financial services ecosystem.
And did you had this kind of philosophy from the very beginning? You had a strong culture, or did that kind of evolve along the way?
I mean, it was from day one. Our very first PowerPoint deck that we put together back in the day when PowerPoint was a thing, it did have in big, bold icons, heart and dollar sign, that balancing goodness in the world and why we're going after this industry in a way, why we don't want to have a hedge fund that's just going to short mortgage-backed securities and play on a macro thesis, but we really do want to drive impact into the world. So the original hypothesis and was a dream of not just me, but Andrew and the founding team and all of our senior leadership today. We all share that same spirit of mission-driven impact and making, a positive difference in the world. I would say it evolves over time. You get to the point where I analogize a lot to my kids who are now 21 and 19, but in the early days, you're a parent and you do everything for them. And then they have agency and autonomy and they grow into these amazing things. And some of it's out of your control. Some of it you put a cultural imprint on, and then they just became these adults that you're just proud of and you watch. A little bit of that's where Achieve is now. It's beyond the impact of just Andrew or I or the senior team, but you end up building the stories, the culture, the identity, the DNA that hopefully, the business just continues to, and every individual in it continues to kind of live that mission every day.
And are you primarily in person, hybrid, remote?
Hybrid remote. So that's on the positive. It allows job flexibility, in particular to more of our call center type of roles. We're 2 days a week in the office now for our senior execs. We just had everybody in our Bay Area headquarters celebrating and reflecting on the year and doing a holiday party last night, which was terrific. We're going to maintain hybrid remote for the near future. It's what our employees want. It's what has been signaled to us, and we're able to operate pretty effectively in that environment.
Excellent. We do like to touch a little bit on investors and the capital you've brought in. It seems like it's been primarily debt financing, which makes sense for your type of business, but you've had equity capital come in. Can you tell us a little bit about the value that your investors have brought aside from simple financial capital?
Yeah. So we bootstrapped our business, which goes back. We teach our case study at Stanford Business School of consciously choosing not to raise venture capital, consciously choosing not to bring in external institutional capital in the early round, because we wanted to have a business that wasn't driven to an exit, that could be created value over a long period of time and could reflect the mission, the dream, the vision that we talked about of what has become Achieve. That would have been really hard with a venture firm that had a fund cycle and driven to an exit in a short period of time. So we're very conscious about that. Over the arc of the journey, we have raised the external institutional capital from long-term supportive and institutional firms. Vulcan, which is now called Circano, that was Paul Allen's private equity firm. They've been equity holders for over a decade, and they don't want to exit because they love the mission, they love how we execute, they love the value accretion story. Stone Point, financial services focused firm, they came in about 8 years ago. Nick Zerbib, Scott Bronner, brilliant, one of the most value-added investors we've ever had in the history of our company, including reinforcing what we do and supporting us, but helping us recruit, grow, tap capital markets. And that's where you touched on in terms of credit and ABS and institutional capital and the explosion of private credit. We've resolved about 20 billion plus of debt on the debt resolution side. We're coming up on almost 20 billion of originated loans. We've done 30 rated ABS securitizations. So we're very, very active in capital markets and debt financing, warehouse line securitizations, so that we can optimize our cost of capital and serve more customers. The Stone Point team's been really, really supportive and critical in that. And then more recently, we brought in a round from a group called Portage that helps us with growth capital. And for us coming out of the pandemic, just continue to deliver on the growth of the business. All of those firms have an expertise in financial services, have a long-term orientation, and are very supportive to Andrew, I, the senior leadership team, of delivering on the value story. And if I go back to the early days of when we bootstrapped, I think our original investors are going to come up on almost 1,000 times multiple on invested capital. So it's been a good journey for the investors along the way as well.
Excellent. Is that Dan Ballin over at Portage?
Yeah, Dan at Portage, exactly. And
Excellent.
Ross and that whole team are terrific. That's right.
Amazing. Final two questions. One is, can you tell us about a person who's had a profound influence on you?
Boy, so many people. And to this day, I have executive coaches. My YPO group holds me accountable, my friends. I'd say my mom, probably my parents and my mom. Both of my parents grew up pretty low income in a small farming town in Western Ohio.
Mm.
And through hard work and perseverance and following their own dream, both of my parents ended up the first person going to college. She ended up getting her undergrad degree, master's degree from McGill, PhD and postdoc at Northwestern, published professor, and just a brilliant person that really delivered on the American dream. And my dad, along that journey, worked in a factory for Kraft Foods and rose up to become effectively the COO of Kraft. And they sold to Philip Morris. And then he was the COO of Fort James, a big paper company. And then he was the CEO of some private equity-backed businesses. For me to watch them make their dreams come true through hard work, perseverance, following their own dream, living their life really consistent with their values and imparting that in me, I think it just sparked to me of, you can do anything. Follow your passion. I knew I wanted to be an entrepreneur. I knew I wanted to make a difference. I knew I wanted to live and run a business consistent with my values and my beliefs. And Andrew shares the exact same sentiment. I think they had a big impact in my life, my view of the world, my parenting style, definitely my leadership style. But there's a lot, RJ, a lot of people have had a positive impact on me and who I am as a leader.
Last question. Can you tell us about a charity cause or other endeavor that you're passionate about? I feel like this is wrapped into your overall business, but maybe, yeah.
Yeah, on one level, I'm so passionate about the impact we make through Achieve, impacting on people's lives. One thing we've been able to do with Achieve is launch the Achieve Community Fund, where we're able to give back primarily to first-generation immigrants, financial literacy in the local communities we serve. But if I double click on, just pops into my head, is I've been on the board of USA Lacrosse for 8 years. I grew up playing team sports. I played lacrosse in college. It gave me a lot of friendship, a lot of learning, a lot of growth. My role there, and then there's some of these satellite lacrosse organizations that I really value and respect: Harlem Lacrosse, Oakland Lacrosse, Bronx Lacrosse, using sports just as a vehicle to go to underserved communities, to bring hot meals, tutors, education, scholarship, and impart life lessons in underserved communities, which you would not think of lacrosse as a traditional match. I just think it's having a really big impact in a targeted way on a lot of communities and kids. I love giving back and contributing to there. So I'd say on the work front, definitely high impact. And then on the personal front, USA Lacrosse does a really phenomenal thing in a way that I'm really proud to be associated and affiliated with.
Brad, thank you so much for taking the time. It's been a great conversation.
Thanks, RJ. Appreciate it.